The rate at which prices of goods and services increase has slowed down. Headline consumer price inflation was 0.2 of a percentage point lower to an annual rate of 6.6% in January. Economists had predicted a figure of 6.7%. Now, on average, prices increased by 0.6% between December 2016 and January 2017.
This is good news for consumers. While the cost of goods and services may not go down, it won't increase at a fast rate. The main positive contributions are from food and transport. Food prices are still being impacted by the drought, but the recent rains should have a positive effect in the months to come. Negative contributions were from alcoholic beverages and tobacco and restaurants and hotels.
It's not that inflation has come down, it's not going up as fast as it was. And I think that is positive. It's a positive outlook for the consumers, because the consumers are now going to feel less pressure on the basic cost of living as food, which is a primary factor into the index, doesn't go up as fast as it was. And in fact, as the drought starts to lift, we'll get more benefits from that. And we've seen that quite considerably. Just look at the maize price from the agricultural point of view. It hit a peak of 5,000, having 2 years ago started from around 2,000 rands a tonne. That was a massive increase, and it's now coming down towards 3,000 rands a tonne now.
Consumer inflation is likely to remain outside the Reserve Bank's target range in the first quarter of the year. This is mainly due to high food prices and petrol price increases. It's expected inflation will return to within the target bracket later in the year.
The Reserve Bank said they couldn't countenance the inflation rate being well above the target rate, that's 3 to 6% indefinitely. However, they now say they'll be prepared to look through this peak, which we see developing around about the current time, towards the end of the year, when they see it coming down to around about 5.8%. That is within the target range. And if that scenario proves correct, then we won't have to have any tightening of monetary policy, which would have been a rate hike. So I think we're probably seeing the peak of the cycle at the current time.
This is the first data coming out using the new CPI weightings for all CPI categories based on the latest living cost survey indications. The new CPI weights were introduced last month to better reflect the changes in society and consumer spending trends. SABC News, Johannesburg.